You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth Talk about alternatives to Wall Street.
So we're going to do a short episode. I got asked the question the other day of should I get, well, a couple people have asked me about getting insurance on their children or grandchildren. You know, should I do that? What are your feelings on that? Absolutely. And it's two ways to look at it. So one, I start with, when I'm working with clients, is the first people I want to insure are the breadwinners, because, you're insuring against the economic loss of your income. So what we want to do is we want to, solve for human life value and make sure, if God forbid, that there is protection there so that you can make sure your family reaches their goals, whether you're here or not. Life, you're going to have 1 of 3 problems. You're going to live too long, you're going to die too soon, and you're going to get sick. And you're going to get sick and live. So what you have to start your financial planning with what I call playing defense. So that's using protection products to play defense. Now, that being said, so there's 2 ways to do it. So let's just talk about traditionally. So a lot of times people will you can buy individual policies on children and just get them their own individual policy. I recommend that the parent be the owner. That way you can control it and make changes. You can also put things like child riders, right? So a rider is just an add-on. So let's say you have a $100,000 policy. Let's just say a term policy or a $200,000 term policy. Generally, as a rider, you can get term insurance for approximately $3.50 for every 5,000. It's a flat fee that covers 1 child or 10 children, And so if I do those, a lot of times I'll do 15, 20, 25,000. One, because when they're, depending on the company, 23, it's convertible without any health coverage, what is the number? Like twice the amount. It's a multiple of the amount they have, so that's good, because let's say they're ill or something. You want to be able to have that conversion privilege. 2, why do you get insurance on your kids? Well, stuff happens. I'm from the city, so, unfortunately, stuff is happening to kids all the time. So what happens is if something happens to your child, or your loved one, you're going to be emotionally devastated. So you don't want to be emotionally devastated and financially devastated at the same time, where you're not prepared. GoFundMe is not a substitute for life insurance, setting up a GoFundMe account, because it's your responsibility to protect against that stuff, right? So, and it does cost money. Funeral interment process is, let's say, $3,000 to $10,000. So if you're just trying to get protection, that's what you need. Usually I'll use that amount, and then I want to double it. So just in case you're grieving and you need time off of work and you can't get yourself together, or you need time to get yourself together, you want to be able to have the funds available to do that, where you don't have to go right to work. You don't have to, literally go back to work the next day because you don't have any money. So that's the other part of it. So now, how do we use this with regards to the private banking strategy that we're talking about? See, so people say, well, how much does it cost? And I always tell people that is the wrong question. The question you want to ask is, how much do you want to save? Because we will create a whole life policy for the amount of money that you want to contribute. So if you want to do, people say, well, how much insurance, how much does it cost? Or how much is such insurance? That's the wrong question. So who was I doing this on? I think I did. I don't remember now. Actually, this woman's 23-year-old son. She wanted to buy insurance on him. He didn't have any. So it was $50 a month where I max funded it. I think it bought about $60,000+ worth of benefit, and in the first year it was like half of it went to the cash value. So, on a younger child, it might buy 100,000 or whatever. So, it buys a lot because they're so young. Now, the key is to put, use that money and create a savings plan that, use it, think of it as a savings plan. So the thing is, I like using these better than 529 plans because what I use them for is because the money inside of the insurance is invisible to financial aid, number one. And then, but, between, you put in a 529 plan, you basically locked your money up for a certain amount of years. Whereas, what happens, you want to have first birthday parties, you Chuck E. Cheese, you got soccer camps, you've got new bikes, you've got Christmas. What if you could put that money in something where you can utilize that money and then recapture it and basically have a pile of money grow, when they're old enough? And I got a daughter that we're getting ready to fund a policy. She's, taking French, and there's a French trip. And so we're saving up $4,800 for this, $4,600 for this French trip. Well, I'm not trying to just write a check for that and never see it again. I want to put in a policy, take a policy loan, borrow it, pay them in full, and then recapture that money and turn around and use it for the next little adventure she's going to have, which might be a down payment for, or not a down payment, a car that I can get for less than that, right? And so, or a vacation, or we spent, $1,500 on summer camp. So those are things called life. So if you can begin to fund that, how do you do that? Well, you can insure a child day 15 of life, right? And so you want to figure out how much can you budget to save for that, and then you get with get with me, but get with your advisor, and you can fund that. But you've got to make sure it's solved. You're solving for maximum cash value. And, because I've seen stuff on TV. Oh, you can buy this whole life plan for a college fund, and you look at the policy, and it's like 5 years in, it's like no cash value, and they're paying $21 a month, and it's marketed as a savings program, but it's not actually structured like that, right? And so you got to get out of the marketing. You got to look how the policy works. They don't work out. I always tell people, policies don't work to build high cash value out the box. They've got to be structured that way. They've got to be structured to hold money. The other parts of that is, as you're considering it, the insurance company, because it's still insurance, so there's still underwriting guidelines, not to get too technical, but you can't just, the parents has got to have a certain amount of insurance. So let's say the insurance comes to $150,000 because you want to put away $200 a month. You want to use it instead of a 529 plan. Well, that means you need to have at least 300. You need to have at least double. Both parents need to have at least double what they have on the kids, and they also want to know how much insurance is on the other siblings. So you need to explain that. So you need to kind of prep that. So it's not a panacea. There's some questions. You can do it, and a lot of times I might have to do a cover letter, but it needs to be explained. People ask me, well, I want to write my kids up on my son. I says, well, do they have to know? Do they have to know? Yes, they have to know, because if I'm an agent, I've got to see them. I've got to ask them questions. I've got to sign for it. So you can't write insurance on people and them not know about it. That's the answer to another question. So anyway, that's a short talk on. So you absolutely, because what happens is, as you're building your banking system, you want to teach it. You want to teach your kids that they have a banking system. You want to show them how to manage money, because all it is a money management system. So you want to build a legacy of wealth and wisdom that they can keep going. They can use it as a down payment for their house. And, in the one of the back chapters of, Become Your Own Banker, there's a whole strategy on how to do this. And, there's a strategy on how to do this. And, we can help model that strategy for you. Give us a call or send me an email, kurtmay@gmail.com. And let's look at, how to structure a banking policy and create a multi-generational legacy on children. So this is in response to a question I had on putting insurance on children. So hopefully this was a short little episode. Hope this was helpful. And you guys have a great day.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.